Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Stock Market Recap for April 26, 2025. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, whoa, the market, what a week we just had. Makes you want to believe the correction is over and we are back in a bull market. And our weekly stock analysis video, well, CrowdStrike just came off a rough patch, but it's still up 4 times more than the market. Right now, it's one of the best performing stocks we have in our portfolios. And our ETF video, well, our top stocks in the top ETFs, and we call it the Sector ETF Star Portfolio. Those top stocks are surpassing both the NASDAQ 100 and the S&P 500 index. All are below water year to date, but our top stocks are showing how well a great portfolio can outperform all others. And let us look at the chart of the market, and boy, yeah, you can see where we came down over here and almost lost it. We were so worried. Then the market went up, came back down again, tried to get up to this 20-day moving average, couldn't do it. Came back down for about a week and then shot up this past week. And boy, oh boy, it's looking very, very nice because yesterday, right in here, and I'm talking about Thursday because I'm recording this on Friday. On Thursday, we came up above the 20-day moving average, went back down to test it, to test the day before, which was Wednesday, and then closed way above near the top of the travel of the day for the S&P 500. And today, as I'm recording this, we're up once again. So you can see we're making a run for this top band over here. And down here, our intermediate term indicator is just started to turn up. So we may have a long way to go. And when we look at the candlesticks, and here we are, you can see where we're above this 20-day moving average, heading for this 50-day moving average. But notice this 20-day moving average is turning up. That's a very, very good thing. Now, this indicator up here is a little faster than our longer-term indicator at the bottom, down here. But it's getting into overbought territory. So it looks like we just might hit that 50-day moving average and try to surpass it, maybe hang out for a couple of days before we do. So this has a chance to get up here. And you can see back here, it did get up there and then kind of played around for almost a month in here before it broke down. Here was the double top that gave us this big decline heading into a couple of weeks ago where it was almost at the bottom. Very, very scary down here to be sure. But once again, our intermediate term indicator down here is just starting to turn up. Still has a long way to go. So this market does have a long way to go to get back up into here. Because we are what? We are about 600 or 700 points away from previous tops. And you know we're going to get there because we do have growth in our economy, folks. And right now we're in earnings season, and those earnings are coming in very nice. And the projections for the rest of this year for the companies that have reported are very, very good. Even the airlines are saying, well, it's going to slow down because everybody traveled last year. But they still say they're going to make a lot of money even if the economy is not so good. And if it's very good, they're going to make twice as much as they said they were going to make. So we're pretty much sitting in a good spot unless something drastically happens. But I think all the worst of the news is out there, and we are going to be arguing with China probably for the rest of our lives. So don't let that bother you anymore. We have to reach a good agreement with China. China has to reach a good agreement with us, and then everybody will be happy. So that's what we have to look forward to, folks. And don't forget, the market is still pricing in about 4 interest rate cuts this year. So that's going to be very, very positive. Once those interest rates start coming down again, then there goes housing, and housing is the backbone of the economy. So right now, housing is in a rut in just several places throughout the U.S., but several big places where there's a big population. But it's starting to come back. And folks, I don't see anything bad about what's happening in this market, and that of course, it won't go straight up to this point up here to previous highs, but it will make a run for that over the next couple of months. So, as I said, this indicator down here is just starting to turn up. And portfolio protection, well, these puts were down around 500, or the market was down the SPYs were down about 500, and that was about 5,000 on the S&P 500. Because don't forget, the SPYs are 1/10 of the S&P 500, and right now the SPY is 548 as I'm recording this on Friday afternoon. So we're way above that. But had the market gone down any more when it reached that 500 level where everybody was scared, we would have been fully protected. For those of you who use this, we would have been fully protected on the way any further decline after that. So that's a nice case scenario. And we like to keep these in our back pocket in case something silly happens out there in the market, as it does every couple of years. And that's like our car insurance. That's like our house insurance. We hope we never have to use it. So, folks, we had a great week this week. Everybody's breathing with a sigh of relief. And, everybody on Wall Street is heading to the beach this week. Well, maybe not the beach. It's still springtime. But they're going to start out early, and volume will be light. And we'll see what happens next week. But right now, it's looking pretty good. And next week, maybe the 20-day moving average will be tested again, but we'll see. It looks pretty good out there right now, folks. So you go out, clear your head, look at your portfolios. You made a few bucks this week. Stay safe, be with your family, and folks, we'll see you back here in a couple of days.